Hi everyone, Brian from Variable Traders here. It's the weekend, October 15th. Hope everyone's having a good weekend. And of course, this is the weekend video. We'll go over what happened last week and then look ahead, see what we got coming down the pipe this week. Roller coaster week last week. Seem to be having a lot of those. So let's get down to it and start taking a look at things that transpired last week. Okay, so we'll start out as always with a bit of a weekend review for the last week, October 10th. We had that much anticipated CPI core inflation data come out. Thursday it came out hotter than expected, which I kind of expected myself. Market was up based on the UK possible resolution of some of the pension fund and bank stuff. It dropped like a stone when the inflation data came out, and then we rallied back, monster rally, rip your face off rally, as they say. And bad news was good news apparently. So, but we were really oversold, and even in the room, I had said that I could see us going back green, as well as Artie also mentioned that. But anyway, yeah, we rallied back Thursday, and then sold off again on Friday. More news on consumer sentiment being stronger than expected. Of course, that means more consumer buying, more demand for stuff, feeds inflation. And of course, that sent stocks back down again, giving up almost half of the gains we got on Thursday. Inflation obviously remaining stubbornly high, and Fed continue the fight. So interestingly, though, the Dow did manage a positive on the week, and the second week in a row, up just over 1%. The Qs, of course, technology really taking the hit there, 3% down, 3.1% down. S&P and IWM both down a little bit on the week as well. Staples Healthcare, obviously, those safety trades were up a bit on the week. Technology and Staples, no, that should be discretionaries. They were the biggest losers on the week. So a little bit of an error there. 10-year Treasury notes, again, just keeps moving up higher. The 2 years almost at 4.5%. 10-year moved over 4% this week, which I think is, was sort of a psychological level we actually got through. And we'll look at those charts in a minute. Dollar, of course, it's breaking out as these yields go higher. So does the strength of the dollar. And Bitcoin, again, just Bitcoin seems to just be hanging in there. It's around just over 19,000 here on the weekend, and still pretty range bound. And of course, before we get going at looking at some charts, I'd like to throw in a quick ad for my book on Amazon, How Profiting as an Active Trader. See, it's money management rules, strategies, and the routines of an active stock and option trader there on Amazon if you want to pick it up. So let's start looking at some charts. And we always start out with the treasuries, and you can see here, as I mentioned already in the intro, we've got the 2-year and the 10-year continuing to grind higher. You can see we're just in a very, very solid uptrend. It just looks like it's going to continue higher, although we could be getting to a point where, 4.5% is probably going to be an area that's going to be some pretty significant resistance. I'm talking about the Fed sort of targeting 4.5%. So we might be getting to the top end of this range, but certainly continuation of an uptrend, and probably going to continue as we go into the end of the year, possibly get a pullback on the way there. But again, yields looking like they're just going to continue to go higher, which of course is going to challenge the market. But we may be getting to the end of that, and markets might start to see that, and maybe start to take heart, and the selling may stop. So again, transports, let's take a look at those. I always like to look at those because they're sort of the canary in the coal mine, as we call them. Again, we just seem to be chopping in a range here. Big day on Friday, well off the lows and screaming higher, and then Thursday, and then Friday, big pullback day, lost a lot of what we gained. So indecision candle on the week. Again, we just seem to be stuck in a bit of a range here right now. It's going to be pretty much the same for all of these indexes. You can see here, monster day on Thursday with the Dow, and as we mentioned already or as I mentioned here, the weekly, we actually ended up on the week by about 1%, which would put in a second week in a row where we actually finished higher on the week. So again, the Dow looking fairly constructive here with two back-to-back weeks of gain. So again, the Qs, Monster Day Thursday, pullback Friday. Again, we seem to be sort of stuck in a range here. Let's look at the weekly. Again, the weekly, we're still pretty much in a downtrend, and of course that 3% loss on the week on volume. Again, technology still not looking like it's the place where you want to be. Again, SPY, sort of same comment. Won't repeat myself, but again, we seem to be on the SPY. We held the 200-day moving average. Mentioned that last week as support, and again, we just seem to be stuck in a bit of a range here, and maybe the markets are starting to anticipate that the Fed is getting close to stopping on the interest rate increases. IWM, same comment. Again, range bound, down on the week, but only 1%. So again, this is IWM is something I'd watch for a rebound. You could play that with just the IWM, or if you wanted to get really excitable, you could use TNA, which is the levered ETF for IWM. If you really wanted to get some beta on, if you were expecting to see a bounce. So let's take a look at some stocks. I'm just watching here. Again, just sort of keeping an eye on things, looking for a time that we're going to start to rally here. And Apple, I think, is one stock that probably could do well in a rally. I had a really nice trade going this week. I've been watching COM. It kind of pulled back, and then it started to move up during the week, and it actually fought the trend. Even on Friday, we had this big pullback. It only pulled back a little bit, but it was really breaking out last week before we had that big move higher. So I sold a lot of it on Friday, right up around this 61 level. Still holding a little bit of it. I think we're going to get a bit of a pullback here, maybe back to 59. But again, looking like it might want to go higher. So I'm liking that one. EOG, this is the Germany stock. Again, I think at some point it'll bottom and probably get a nice run. Pins, really just was watching this for a breakout of through this moving average, and it just couldn't do it. So now we're getting a pullback. But again, I think Pins, profitable company, making money, and could be a decent trade if we do get a bounce. Rogers, still watching that one. I got a little bit of that. And again, SQQ, down one day, up the next. Still playing these, and it's very short term. You got to be fast with these, in and out. They're pretty much day trades at this point. Tesla's interesting. We had a big reversal on the Thursday, and then we had a complete engulfing candle on Friday. This really just a lot of pressure, under pressure, just because probably the Twitter deal, and maybe Elon's having to sell a lot more of his shares. Maybe some of those sales are all him building a cash position so he can take out Twitter. But again, if I look at this on a weekly basis, last week, we were just holding on to this level here that was prior support. And last week we ended the week down really right at these wicks, which tells me essentially it did lose support. So we may get a bounce next week depending on what the market does, but Tesla under a lot of pressure here, and that $200 level is very, I think, pretty psychologically critical. I've still got some CCJ in one count, but it's really not trading very well. Uranium's not trading very well, like a lot of the other commodities that are really dependent on a weaker dollar actually. So they're not doing very well. Gold, same thing, just really underperforming terribly with the strong dollar. So that's what I'm kind of watching this week. And let's take a look at some seasonality chart just to finish off here. And just a little bit of an extra chart here that sometimes I will watch, or I check fairly regularly. And you'll notice here, this is seasonality. I speak about this in my book, and seasonality can have some impact on the stock's performance. And so I've just thrown up the SPY 20-year performance seasonally. And you can see as we're getting into the latter part of the year here, of course, we got September, we got through September, which tends to be marginally profitable, and October a little more profitable, 67% of the time. The SPY is up over the last 20 years. But you can see as we get into November, it's up almost 80% of the time. So, it looks like it's possible. And of course, we've got the midterm elections as well. So possibly, not to say that this always happens, because there's still 20% of the time the SPY is down for the month, but odds are we might actually have a decent rally going into the year, or some kind of a rally going into the end of the year. So just a little bit of a extra indicator to look at and watch. So let's wrap this up here. What to watch next week? We've got the Dow. You can see the levels there. I've put in brackets, support and resistance levels. And again, we are sort of in an area where we seem to be chopping, as I've mentioned already. Economic events that are coming up this week. We've got a lot of mortgage data coming up this week, midweek. Also got some housing data on Thursday. We've got the Philly Fed Manufacturing Activity Index on Thursday as well that people will watch, and for signs of cooling economy, hopefully. And of course, we're now well into earnings season. You can see some of the companies here that are going to be reporting next week, and we will be watching. So that will be quite interesting. Anyway, have a great rest of the weekend, everybody, and we'll see you at 8 o'clock on Monday morning. As always, we will be starting out our pre-market show live on YouTube, and then with our members trading the market open at 9:30. So take care, everybody, and we'll hopefully see you Monday morning. Bye for now.